Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. How's it going, Ben?
Good. How are you, Will?
Oh, doing well. Getting a little worn down already in week two of the semester here at Ohio State. I'm sure you got your hands full over there at MU.
Yeah, we're rocking and rolling. I think the big thing for us this week is Missouri has a Thursday night football game.
Heck yeah,
So we're all
South
trying to
Dakota.
figure out, for those of you that are listening, you're probably sitting there going, "Well, what does a Thursday night football game have to do with anything?" I have literally spent most of my day today trying to figure out how to take my class and get them an education while being kind of recommended to do virtual learning so they can have the parking spaces for the football game. So just FYI, Thursday night games cause a lot of logistical challenges. That's
Well,
all. I
is
probably
that
just lost my job, Will. I just probably lost my job saying that. That's all right.
is that a 6 p.m. kickoff?
I'm
I think so.
gosh,
But anyway, that doesn't matter. That's neither here nor
it's an
there.
evening game. I do know that. Parking lot's open at 2, so
All
I
right.
think it's
Well,
probably a 7 o'clock game. Who's Ohio State got this week?
Ohio State, Indiana in conference game to
Indiana.
get things started. Yep. So yeah, both fun ones to get things rolling. Should see both teams cruise to a win, hopefully. Anyway, enough about inside baseball there. Let's talk about some commodity price adjustments, both some positive and negatives, looking at the overall commodity crop, grain and oilseed complex. September 23 corn was up 9 cents at 478. December 23 up 14 cents at 496. For those September soybeans up 25 cents at 13.95. November soybeans up 44 cents at 14.05. Soybean oil for September was down 1.09 cents at 66.90. That's cents per pound. Looking at soybean meal on the short ton, up $15.90 at 425.70. So some pretty sizable gains there on the week. The September wheat for the 2023 year down 11 cents at 588. July wheat was down 5 cents at 668 for the 24 crop year. And then that crude oil for September was down 42 cents a barrel at 79.70. So Ben, what are your initial thoughts there as you see some gains for corn and soybeans and then some losses on that wheat front?
Yeah, let me start with the grain complex, and we'll go to energy here. I think I'm probably most intrigued with those new crop corn and soybean futures prices, both up on the week. I think that signals some of the heat that we saw across the Midwest, and then the dryness that's expected this week. So both up. I think I would have anticipated new crop soybeans seeing a stronger relative gain than corn, right? So absolute value, soybeans was up 44 cents to corn's 14. But when we're talking about the percent change, I think I would have expected a stronger new crop soybean gain relative to corn there. So that one is interesting. The other one that I think is just notable is the fact that the West Texas Intermediate crude oil price dropped below $80 a barrel again. That again seems to be maybe a psychological threshold that now we may start to see a little bit of price relief, maybe on the crude oil side. If you're a consumer, that we might fall a little bit here as we head into the early fall.
Well, we saw some shifts on the crude oil stock side of things. They're dropping down. You had some unexpected shutdowns and then some other shifts there along the energy sector as well. I guess is that factoring into that drop on the crude oil price, or what is that really telling you?
Yeah, so I think probably tells me a little bit more about the expectations for the economy, maybe more so than the production side. So, if we just look at that production side and supply side, tightening stocks once again for U.S. crude oil, that would signal a higher price. But last week at it's affectionately known as the Jackson Hole Economic Symposium, Federal Reserve Chair Jerome Powell kind of painted maybe a little bit more dismal view of the U.S. economy than what the market had anticipated. So my guess is that without that, oil prices probably would have been up week over week with the new expectation or sentiment of weakening U.S. and global demand that maybe pulled that crude oil picture down just a little bit. So But at least from a supply and demand standpoint, the energy side, at least for crude oil, is tightening. We've seen some relief in the distillate fuels market, especially here in the Midwest. A very tight diesel fuel market last year has kind of largely eased, and we've worked our way through that.
So going back to the commodity crop side of things, talking about some of those gains that we saw in corn and soybeans, you mentioned some of the weather factors that really played into that, some of that heat, and we're really expecting that to continue through the next week to 10 days. Looking across a lot of the Midwest, there's light rain chances. I guess, you look around the Mississippi River and those central areas, you get light rain chances, but otherwise dry and hot, especially as we head into the weekend, looking a little bit further out. So, Ben, as we see that, as traders see that, as farmers see that, how do you expect the market to really be tracking that? Do you expect those gains to continually gradually rise as dryness might continue?
Sure, and that's why I think I'm surprised that we didn't see a stronger gain in the new crop soybean market. Those November soybeans, again, up only 44 cents. I maybe would have anticipated a little bit stronger gains given how tight we are in that complex, just how limited supplies we are expected to have at the end of the year. And then this hot and dry weather that we not only experienced last week, but as you mentioned, kind of in the forecast going forward, that's really going to take a toll on our soybean crop. Weaken production, limit supplies in an already very tight soybean complex. So I think that to me is probably something I'm going to keep an eye on. And certainly I think these gains can continue if pods start abandoning, or we start seeing plants abandon pods as we head right into the end of the growing season, right before harvest for soybeans. So I am actually probably most concerned about soybean production at this point and the potential for higher prices.
Well, and looking at that production, we just wrapped up the crop tour, the Pro Farmer crop tour here the last few days. I believe that ended 3 days ago. And the expectations, the estimates that came out of that were below USDA's numbers for both corn and soybeans. So I guess, are your expectations more in line with those on what the overall yield production could be?
Well, so I'll start with corn, and then we'll finish with soybeans, which is actually, I think, your question. So the crop tour has a tendency to be lower than USDA. I think the average difference is about 2 bushels lower on corn than what USDA has ended up with in the past. And there's a number of reasons for that, right? In terms of failed acres and, what's eventually not cut for grain and different things. I mean, there's a number of reasons for that. So I think I'm okay with, 175 bushels per acre on the national yield. So maybe coming down just a little bit from where USDA was in August on the corn side. And I think that largely parallels nicely with what the crop tour found across the country. I'm not seeing anything out of there. Now we can talk about acres here in just a second, but at least on the yield side, I think I'm largely in agreement on the corn side. On the soybean side, this is where things really start to get interesting from the standpoint that USDA's first soybean yield estimate in August was before we saw all this heat, and we actually had seen very good weather kind of trending up through the August crop report release. And so I sit here and I say to myself, I could see us falling 2 bushels per acre pretty easily on soybean yields. The crop tour was down, just over a bushel per acre from where USDA was. Could we fall a full 2 bushels, especially with some of this heat coming? Yeah, we certainly could. And now you're starting to take 170 bushels, 160 to 170 million bushels out of a very, very tight soybean complex, right? So I just go back to that and say, the crop tour might be starting to, tease a little bit at some concern in the soybean crop. Now there's places that are going to be very good. Ohio, Indiana, got some needed rain this weekend. There's places in the Midwest that got rain this weekend that needed it after some very hot and humid days. As we look this next 10 days, right, can we get some moisture in some other areas? And the forecast certainly isn't suggesting that.
Well, Ben, and that's the thing as you move forward, you talk about Ohio and Indiana having some timely rains. I know it's been pretty wet in Missouri to start. It was at least to start August, and maybe some of that's cleared up now. But what are some of the areas throughout the Midwest and maybe down into the Delta that are going to be most heavily impacted moving forward? You think you'd imagine as you get a little bit further south, you might see some more dryness and the heat affecting the production even more.
Sure, yeah, and it's going to be spotty. That's the vague answer that everybody hates, and everybody's like, of course it's spotty. There are places in the Corn Belt that are going to have a really good yield. There's others that aren't going to have a good yield, and that's going to be the case within states as well. Northeast Missouri could have a pretty decent, or well, at least Northwest Missouri. So think of like the Missouri River up into Iowa and Nebraska. They're going to have a good soybean crop, but you go 150 miles south of there, south of Kansas City on the western side of Missouri, where we have quite a few soybean acres, and the crop looks terrible. Like it's a really, it's not a good situation for soybeans. They missed all the rain. They faced the heat. They've been dry all summer in that area. I could say the same thing about certain pockets, very specific isolated pockets all through the southeast part of the United States. And we could spend our entire time just talking about where those pockets are, but producers know where they are. And you'd probably sit there, and if I tried to guess them, they'd tell me, no, you're about 50 miles off. And that's just the name of the game here. So I think the challenge I have is, does Ohio and Indiana, with their weather that they had and how many soybean acres they have out there, kind of make up for some of these other areas that, given that Iowa and Illinois might have an average soybean yield, right? And I think that's where we're at, is, does Ohio and Indiana make up for all these other pockets around the country that aren't
keeping up? And it's going to be really interesting to see too what that does to local bases as you move through the fall and the splits that we might see across the Midwest there. So sure. Ben, looking to round out this week, what should farmers and ranchers really be paying attention to that could be moving the markets?
Yeah, so Friday's the 1st of September. That's kind of a notable day because that starts a new marketing year. So we're in the final stretch here of the 2022-23 marketing year. So September 1 is a big day for that, just in terms of the markets and kind of sentiment. We also get the July grain crushings report. We get the July fats and oils crushing reports as well, to kind of check in on ethanol grind and soybean oil used for fuel. And then the other big thing I think coming up is next Monday is Labor Day, and the markets will be closed. So everything will be delayed a couple of days, or well, every USDA report will be delayed next week. But I think it's just worth mentioning that with the change of the marketing year on September ahead of a 3-day weekend, we could see some strong action in the markets.
All right, Ben, it's always good to have your input. Viewers and listeners, if you'd like to learn more about us and what we do, you can check us out at brownfieldagnews.com. And you can also find our sister program, the weekly livestock market update, at the same location at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.